What's going on, everyone? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. In this video today, we're going to be talking about the markets. This video today is probably one of the most important pieces of content that you will see this week. It will help shape and form your thinking going forward. I highly suggest that you commit to it, that you watch it to completion. You're going to learn a lot. Please go ahead and share below in the comments any lessons that you learn. If you do like the content, please go ahead and hit the like button and make sure you subscribe for more. So this is a big bias for a lot of people. This is right now, today, across the internet, like the biggest chart out there where everyone lining up the uncanny similarity between the great financial crisis, 2008, and what's happening right now. You could see it viewed off of this very clearly. The peak of this massive rip up that's occurring in real time. It's been 309 12-hour bars since the all-time high in 2008. It was 318. And in every way, shape, or form, it looks like the same fractal is, let's say, got into everyone's mind. Now, one thing that is different, you could see it over here pretty clearly. Back in 2008, you could see that price came into that resistance off the low. And then that's where it rolled off. It's a little different this time in so much that price has gotten above that March low and into the heart of it. Another thing that's different or the same is that going back into 2008, it was off the 200-day moving average that price rallied to and then rolled over. That is happening right now in real time. So there are a lot of similarities. There's no questions. There's also a lot of differences. Let me keep going and talking about biases. And I think it would be a little bit with the amount of people who are paying attention to it. I think that it would be, I guess there would be a very low probability that occurs. Similarly, perhaps to using fractals that I myself was using at the top for the blow off market in Bitcoin and cryptocurrency, when at that point in time, almost everyone is paying attention to it. And sure enough, it was different that time. But a lot of people, this is what I really want to talk about, or the heart of it. Recent stock market rally could be merely a blip in the deeper bear market. If you look at the great financial crisis, the dot-com bust, or the 1973 bear market, a lot of these down cycles produced this type of return before selling off very, very substantially hard. And I think a lot of people are really mentally prepared for that. Not only mentally prepared for it, I think they're psychologically prepared for it. And I think that a lot of people out there are actually positioned for it. So it must hurt this move up. And if it rolls over, they'll be fine because probably most of them have not capitulated. And if things especially wind up taking out the yearly low and then roll over, everyone's going to be fine. So a lot of people are really talking about how the current market dynamics remind them of 1973, 1974. That's the punchline of what I'm going to get to here at the end. But to get there first, let me continue talking about some things. Last week I wanted to talk about this thread with all of you from Sven, and I'm going to start over here now, right? So I have one big concern. I see a lot of charts on Twitter these days where people point out that in 1974, the lows were in as soon as inflation peaked. By the way, I don't think inflation peaked in so much as that I think that, and again, we talked about it, the Federal Reserve talked about it yesterday. If you start seeing commodity prices moving back up, then that inflation peak we talked about was near term. It might have lasted 2 months. It might last 3 months or 4, near term, right? Anything, 6 months and beyond, that's intermediate term. Whether or not it's near term or intermediate term, well, I believe it's one of those two things, but I do believe that come back up higher. That's my bias or what I believe is going to happen. So I don't believe inflation peaked, right? And we're off the road to the races, similar to 1982. Stocks recovered all their losses in 4 months and went on to new all-time highs, okay? Which could happen, by the way. We're going to also check out that in just one more second. Let me finish here, though. So he points out, by the way, the one big difference, and I can't find it here, but he's pointing out the debt to GDP ratio was roughly 30% then and is now, I'm going to say, 120%. That's a major difference. And also, oh, by the way, the degree that the Federal Reserve rose rates back in 1974 or in 1970s, I should say, is almost equivalent to how far they've raised rates right now when you factor in the debt. I remember about a month ago so talking about that with all of you. That came up from Bitcoin Tina mentioning that, and then we just reiterated that was an interesting concept. Hold on one second. In all those bottom scenarios, the Fed was already in an easing cycle by cutting rates extensively. So you remember that we talk about that the bottom of the cycle ends when the Fed begins cutting rates very rapidly because they're getting ready for the next easing cycle of quantitative easing. None of this is happening right now. Agreed. However, by the way, asterisk, it doesn't mean if you look at, for example, 2018, that was the end of the tightening cycle where they paused rates, or the last rate hike. From there, they went to pausing. Quantitative tightening still rising. The crisis came in 2020, and the lows of 2018 were not taken out. So it is quite possible that what we're seeing right now in the markets is indeed a bottom. And even if the crisis came later in 2023 or 2024, it doesn't mean that these current lows are taken out. We just don't know. And I think that's the best asset we have going forward. Not trying to back ourselves into something that is going to take away our ability to trade what is happening. Back then, there was no quantitative tightening. So I think a lot of people miss quantitative tightening has a history. It's only one cycle of actually seeing risk rally as it's happening. The only difference was it was really the primary cause was the hiking cycle. So in the 1970s and 80s, the Fed was tightening into a 30% debt to GDP, not 125. Nobody has a clue what the impact, this is an important sentence. No one has a clue of what the impact of a rapid tightening cycle in such a backdrop will be. 100%. Let's make sure that we keep focused on what our potential blind spots and weaknesses could be. Yes, between 2015, Fed was going slow, blah, blah, blah. So let me just go forward a little bit long. The evidence whether June was a true structural bottom or this rally is just a bear market rally, consummate with previous historic examples that will eventually roll over, is still unknown in my view. This is 100% the way that I view it. We do not know. And anyone who's taking at this particular time a view that they know what is happening, whether it's up or down, I think that's a big handicap. So that's great. My sense is this time between look at this. This is awesome, Sven. This is exactly where we are. My sense is the time frame between now and the end of October will give us the answer. How many times we've been saying that? I expect a lot of two-way price chop in between as markets negotiate the answer. I love that too, because the markets don't know, right? They're trying to figure it out. Now, we did talk about Luke pointing out, well, right here, the markets might go sideways. That's true also, with also not making it easy. Like this would be easy, right? And this would be hard. For now, nothing is really surprised on the price. This is a great share. I'm glad to have been able to go over this one with you. You remember last week I wanted to, and it just wasn't the time. Well, here's the time today, right? Oh, by the way, this is also awesome. In keeping with traditional bear market rally psychology, it is when optimism returns. I'm seeing optimism return. It's true. I am seeing optimism return. Now, I don't know if it's enough. When people think the worst is over and the lows are in, is oftentimes these assumptions will get tested. Follow a big counter move. I submit we're seeing this return to euphoria now. It could be very well. I've always had in my mind, this is my unfortunate bias, I've always believed that time would occur more or less with, let's call it markets higher, Bitcoin between 45, 55,000. That was like the alert period for me. I can't deny that what I'm seeing in Bitcoin is Bitcoin lagging behind, right? Bitcoin here has not been able to follow through. It does seem very clearly equity markets outperforming. We're seeing obviously Ethereum with good reason outperform, but Bitcoin is lagging for sure. So with all that in mind, I now want to talk a little bit about just price action. Okay, that's the great lead in over here. I'm not trying to use any of this past price action from that period to say that I think that this is what's going to happen here. Zero whatsoever at all. Okay? I don't know what's going to happen from here. And not only do I not know, I want to make sure that I have biases, that I kill them. That's what I'm trying to do, is destroy all my biases and be as open and fluid and as zen as possible. All right. Chio, Jen, great to see you all in here, right? With those good vibes, that positive energy, making it all happen. But this is interesting, and I do want to look at it for you, kind of to help us prepare for everything. Now, a lot of people out there, if you look at Urian's comments, if you look at, I think, Sven's comments over here, I'm just looking for 1974, right? Maybe it was only Sven was saying 1973 earlier in there. But a lot of people believe that we're towards this area, right? Fed's been raising rates and inflation peaks. And then from there, markets bottom and then, go off to the races. And when I say races, I'm talking about, as he pointed out through first of all, just to give you the first major rally is 55% in nature. Next one here is 72%, 120, 177%. Those are enormous gains. Now, with that in mind, let me just talk about a couple of things. Number one, I personally, and I don't have the truth or close to it, is I do not think that inflation has peaked. I think that maybe it has peaked for the near term. By the way, so I don't think that we're close to being in 1974. What I want to do is go back with you and show you what happened before there. I think that is interesting as far as preparing ourselves for all types of different potential outcomes, because I don't think that just having the view that this is the outcome that comes next is healthy. I think everyone's aware of it. If you missed it, here it is, right? Everyone is watching this fractal, and there's a good portion of people insistent that this is what has to happen next. I personally, and where my bias runs strong, is I am under the belief that what happens next is that, and we're seeing it happen already, and we're seeing the markets move, is that as this kind of momentum change from tightening is going from turning from a high degree of tightening, 75 basis points, and now it appears going down to 50 basis points. Like, that's the turn. And as that last high print occurred, that's where the markets have been rallying. So my view, my bias is that here the Fed moves towards a pause eventually. I don't know if they get there next month or it takes them into 2023. But we don't see a higher, if we go down to 50, we don't go back up to 75. That was the turn, right? And that's a bias. That could be wrong. And I'm going to show you a couple of examples of potentially even what that would look like being wrong. For example, here's the Fed tightening, right? And then here they go towards a pause, right? Here you see the markets pause, and then they have to go back to tightening, right? So even if we see, by the way, 75 basis points, go down to 50, 25, if inflation is high in the fourth quarter, they might be hiking going forward, right? If they are, expect some turmoil in the markets. But that's not the point I want to get to. I want to go back further with you, okay? And I want to show you. Hold on. We gotta have do not disturb on all the time. Do not disturb me. I'm with CTM. All right, so let's go. Let me continue going back over here. And so this was one thing that we just looked at, and rates are rising here. They went to a pause. They went down, right? And then they went higher. That's something that we have to be prepared for. That is why we're watching things like, again, bringing it back to oversimplify, but crude. And we're watching to see if we're making new yearly highs by the end of the year, that is extremely worrisome. That is going to cause the Fed to have to act. Here's what that might look like. Let's go back a little bit further, okay? Let's go back before then, right? Let's go back all the way to 1967, right? In this area, 66. This is something that could potentially be happening. Like, we have this bear market. By the way, that's a bigger bear market than we're in now. Well, it's just the same. This is the degree of what the S&P 500 has come off of right now. And actually, it looks a little bit similar. And then you saw price come up and by the way, rates are rising over here. That's important. Is last hike comes in. And then as the rates start coming down, price rallies and makes a new all-time high. By the way, why it is 22% on the downside, you're looking at then 30% on the upside. All right. And then what happens? Let's take a look over here together. Again, I'm not looking for any type of past behavior to play out again. I'm just trying to prepare us not for one scenario, but for all scenarios. And I could imagine something like this happening. I don't know if the current rally stops here, goes a little bit further in relation to the all-time highs, or it even makes new all-time highs, right? We see it looks like, oh, everything's better. Rates coming down. Fed's done it. Soft landing. And then what happens over here is into 60. This extends quite a while, right? We're going to take out this low, though. This is what I'm really preparing us for here, is what happens if it looks like we are able to make new all-time highs or come close to it. And then 2023, we come out and take out those lows, right? Man, what would happen is, by the way, from a psychological standpoint, is at some point in this area, a lot of people are going to flip. A lot of people that flip bearish over here. And don't forget, the truth is most people flip bearish on that. Remember that really big rally we had at the end of March into the beginning of April? After that took out the March lows, that's where a lot of people became bearish, right? And when you flip your overall bias bearish, and then there's a massive rally to the upside, you'll be okay if it rolls over and goes back down. But if price continues coming up, those same people who followed momentum late are going to be flipping bullish, right? By the way, at this point, this will be the bears saying, oh, we're okay, we're going to make it. And then at this point, those people here probably have capitulated. And then it rolls over again to the other side. I mean, that's what I'm really worried about as far as the overall market participants. Look at May when they pause and the market dumps. So what I really like about that, Luke, is that my strong bias has been that as the Fed pauses, it's going to be able to extend the cycle out. We're going to see risk rally. We've now seen over here 2 occurrences of the Fed pausing and the markets dumping and dumping hard. Here's number 1, as you're pointing out in 69 over here. Fed moving towards pause, May of 1969. And here's a big pause and markets dumping and dumping really hard. Actually, on the rate cut, they dump even further, right? And then, honestly, can you imagine how difficult this period must have been in the markets, right? Coming from these 5 years, from the all-time high here in 66 until 71, those are big swings in both directions, like really big swings. Here's a 20% move down, followed by 25% up, 10% down, 20% down, followed by 35% down. I mean, that for a swing trader, it's a dream, but for most people, that's a nightmare. And I guess what I'm getting at is we don't have any idea what happens going forward, right? And the more that we get into that type of mindset, the greatest asset it's going to be for us. Now, hold on one second and just take it further. And here it seems like, by the way, you're out of the woods, right? Because off of that low, then you put in a massive rally on the markets. And then Again, you're taking out that low again. So forget those 5 years. Those 10 years are absolutely brutal. Brutal, right? So what we're trying to do is make sure that we continue to be in the greatest position of strength. I don't think it stops at just having, the extraordinary solution CTM 2.0. We got to continue moving forward and looking to branch that out across everywhere, across the markets. So now something that would have given someone probably the greatest edge throughout this whole area over here, this whole period, right? And you could start it over here, starting in 65, 66 at the top, we started it, right? Let me just do, yeah, let me zoom in a little bit. I'm going to stop over here, right? And sure enough, all I want you to do is focus in on the 227 when this is green and when this is yellow and white. And by the way, this is not really a strategy in itself, right? We could go back and we could back test it between that period. I assume it's going to be profitable. I've back tested through 2000 to over 20 years. It's profitable, but I just want you to focus. But a strategy that is enough to develop a strategy. Being able to define the trend like that, then that is enough for us to continue and even do better by building a strategy around that. Let's just take a look in real time, knowing how speed's full. Perfect. Is that too full? Hold on. Exit 89. Boom. Back in 84. Because the truth is, in looking at that and just being honest, you would have probably got obliterated on both sides. Long since 89, long since 84. Flip flop over here at 93 a couple of times. 92 short, flipping back long, 93. First little 1 point loss taken. Other since that, it's been small gains. More importantly, you're on the right side. Long here since 93.3. And out at 98, back in. So that's a, again, nice little scalp, but more importantly on the right side. Lots of back and forth over here. I think you give back a lot of your gains or a portion of them, but you're short and protected at 101. Well, that wound up being a joy. Out of the market since 101, saving that precious capital. Back in over here, flip-flopping a little, back in 84, though. That was a massive, massive protection over here. Small in and out in the market since 84, and now you're participating on the upside. I'm just reinforcing what we got going on here, what we're doing here together, and making sure that we continue to move forward and tighten up what we're doing, right? A lot of people right out of the market now, 94. It's a nice little gain. Protect yourself back in a little bit higher at 96 and then back out at 97. Break even. Great place to be. I don't know what all that nonsense is over here. So, point taken, right? Well realized. And I'm just trying to inspire all of you so that we could continue as a group, as a whole, to contribute, to work together, to bring in ideas that could take what we have so that as we talk about, and often we do, right? So you aim to climb the highest peak you could imagine, right? That's conquering the markets. But as you get towards that next highest peak, as you get towards the highest peak we felt that we could climb by the way, being able to execute without emotion, being able to have a mechanical plan in place to profit from the markets potentially as that the greatest could do, that is right there conquering the markets. But then when you get there, sure enough, you could see a whole mountain range that you weren't even aware of. And there are much higher peaks. And again, you can't just be satisfied with what you've done and what we've done. We have to continue to set our sights on what the highest peak is, then work together, now taking everything that we've learned in the process and setting it upon the new highest peak. And that is what we're doing here together. John, you're going to enjoy it. Really good session. Luke, no question about this. We're in it together and we're going far. Everyone, thanks for being here. My pleasure. Thank you for being a part of this unique and special community we share. And we just want to make it better and better. And again, it's not straight up. There are many times of plateau, and then there's many times of off that plateau, making leaps up. And then there's what a beautiful time to look back on as we get to that period between, let's call it March and April and into June, when we had those intense sessions taking place in here, laying the groundwork, the foundation of where we are today. Absolutely beautiful. Everyone, I hope you have a beautiful day. I'll see you tomorrow for our Friday session. Thanks for being here. Thanks for putting the work in. Thank you for everything that you do. May God bless you. I'll talk to you tomorrow.